and welcome to Price Action Trading School, where to search for entries. My name is Nenad, and today we will talk about searching for entries on multiple time frames. So our Price Action School is proceeding, and we actually will start to trade, I hope, live on Wednesdays just after New Year. So we will still have Price Action Trading School going on till New Year, and after New Year I think live trading sessions will be each Wednesday. Of course, session recaps will be also online as always. So before we begin, our standard disclaimer explains that CFDs and Forex trading are leveraged products, can result in losses that exceed your deposit. This presentation is for informational education purposes only, and online education materials are available by Admiral Markets Estonia for a global audience. So this video is not part of the .co.uk website, but the globaluse.com website. My name is Nenad, and you probably know that a lot of traders ask me, will I still be holding session recaps in addition to Wednesday live trading? And I said yes. Session recaps will stay the same after New Year, and new addition will be live trading. So there will be even more chance, guys, to focus on the money from the analysis, from the session recap, and from live Wednesday webinars. I will try to do it during live session, and yeah, so let's see. Of course, we will be using price action trading school principles for trading the price. So MTF approach, that is today's agenda. MTF approach, where to search for entries, and live chart. So MTF refers to multiple time frame. So MTF trading analysis refers to the same pair on different time frames. It means that a trend exists on each time frame, but since we are selling from the top and buying from the bottom, we are not actually following trend-based time frame for the entry. We need a loss of momentum to base our entry. Okay? We use usually different time frames for our analysis. Daily for trend, 4 hour for retracement, and 1 hour for entry and loss of momentum. To sell, price must be overbought. To buy, price must be oversold. Those are very, very important principles. And that is how we can also measure our zones where to place entries. I do it from my heart because I know where my confluence points are. But for all of you who are not familiar with this concept, you might add few indicators that I will actually show later on live chart. One of the principles is also to use 4 hour for trend and then 1 hour for retracement and entry. That is also very important. So in order to sell, price must be overbought, and to buy, price must be oversold. It means it needs a retrace. When it comes to trend trading and trend-based entries, price always needs a retrace before we actually make a fresh entry. So daily is basically for trend, 4 hour for retracement, and 1 hour for entry. But sometimes and occasionally, if we don't see a clear entry on daily, we use 4 hour for trend and 1 hour for retracement and entry. Because many times you won't be seeing strong trend on daily, but rather maybe some ranging price action with some spikes in momentum. But 4 hour, especially if we use for intraday or intra-week purposes, 4 hour combining with 1 hour is very effective. So we should be paying attention to that. It is very, very important. Also guys, we do usually 1 minute and 5-minute entries solely with 15-minute setup chart. That's also very important for you to know, because 15-minute is used for spike entries. So if you want to actually make an entry on a lower time frame, you need to take into consideration the importance of after news spikes. It means when you make a positional trade, let's say in some pair, you don't want to be caught in after news spike. The only exception is if you make a very low risk entry, then you can actually avoid high risk. But if you want to trade both positional entries and spike entries, then you need to make 2 separate positions. So let's say that you had a long on pound dollar today and you actually wanted to trade news like autumn report, right? So what you could have done is that you maybe placed a long entry on pound dollar, but also in the same time you shorted news. Why? Because lower time frame entries such as 1 minute and 5 minutes are best used with spike trading approach. I know a lot of traders who want to do it with multiple time frame approach, but I doubt the success of it, because 1 minute and 5 minute entries require a very strong momentum push. Very strong momentum push, because retracement, if you want to find 1 minute or 5 minute entry, retracement will be very shallow. And the chance is that it will become deep retracement. So that is why I prefer 1 hour entries. And most of the time you will find 1 hour chart showing POC zones. I really prefer some deep retracement, but I know that some people actually want to try to trade lower time frames. So for setups that are made on 1 minute or 5 minute, we should do it only as a form of spike trading. So don't forget it. We can trade the news, of course, but we usually use MTF approach if we want to trade the news. It's an immediate momentum trading, and we only want to be caught into strong impact news. And pairs that we usually trade are Euro, Dollar, Yen, and Australian Dollar. Okay, I see people still coming in. Ilya is saying hello. How are you? Very good, Ilya, and I hope that you're good too. Vita is saying hi. Hi guys, so welcome. We started this webinar at 6:15, so actually you're not that late. So once more for people who join now, for positional entries, we use either this or this. Daily for trend, 4 hour retracement, 1 hour entry. Or 4 hour for trend, 1 hour for retracement and entry. The chance is that we will be mostly using this, because very often we will not see a clear daily trend. But if we do, well, that adds an extra flavor to our entries, because then we usually assure a strong and precise entry. It's also very important to note that besides 1 minute and 5 minute entries with 15 minute setup chart, okay, we need to take into consideration that 30-minute chart is usually a profit-taking chart. So that is why you will not see me doing anything on 30-minute chart, except sometimes breakout. Now people might ask, why 30-minute for breakout? Because guys, usually, as I say, profit-taking is spotted on 30-minute chart, and if you use it for breakout trading, the chances that you might get with hit and run. Take fast entry and close the trade. So it's usually for breakout. But if you use Camarilla pivots as I do, well, most of the time, guys, you will not be seeing anything bad with taking breakout entries based on Camarilla. Okay, so that is also important to note. Now, also very important to note is that price always should be either overbought or oversold. I was telling you this many times since the start, but actually this is very important, because the biggest mistake that traders usually make with entries is that they try to trade shallow retracements, and those shallow retracements will usually provide you with no pips at all. That is why we say use it only on when momentum is strong, and for strong momentum we either need a strong surge of the price or after news spike. Strong surge of the price usually is seen when something important happens, there are some news, rumors, and you see that price is really going strong. So why we use MTF approach and not single time frame approach? Because we want to align the trend. We also want to align momentum. What it means? Now I will use a good example with pictures. So let's say that this is trend, right? On higher time frame. If you drop to lower time frame, you will see that it started to retrace. So on higher time frame you might be seeing this, but on lower time frame you might be seeing this. It's called pigging back momentum. So it's very, very, very important, guys, because as I say, you don't want to be caught in a false spike. Okay, you don't want that. You want to actually have a good entry. Because of that, very often you will see that the price makes retracement on lower time frames, but it means that the trend is still strong on higher time frames. It doesn't mean necessarily that the trend will change. That's important, guys. It does not mean that the trend will change. It simply means price needs a fresh surge of momentum to actually be tradable. So if you see on higher time frame a trend, but on lower time frame that the price is retracing, the logic of this pigging back is that you want to make entry on lower time frame, because this higher time frame will probably proceed to target. Usually the question arises, what will happen when higher time frame hits the target? Should we also drop to lower time frame and search for the entry? I always say no. If we know the target has been hit and that the ATR is higher or equal to 90%, well, we don't trade anymore. It means that the price probably reached its full potential, and we will probably see a retracement. So that is why, guys, you need to be very careful when placing a trade. I know that traders simply neglect the importance of lower versus higher time frame trend, and they're usually caught with their trade on the bad side. You don't want that. Okay? So align the trend, momentum, the target, the stop, and cherry pick the entry. That is very important. So we only use this approach within trend-based entries. Okay? We are pigging back higher time frames, And the larger the time frame, the more likely an important support or resistance levels would hold. The purpose of this is to have more precise entries. Entries that are aligned with our analysis. So for that purpose, I will show you my EuroCAD analysis. I got 100 pips on this trade. I don't know if you traded it, guys, but I was very, very specific. The price made to the top of POC to the pip. So you see how the power and what the real power of POC zone is. The price made it to the pip, touching the top of this POC zone, and it rejected for 120, 30 pips. Okay, so that is what we had today on EuroCAD. And also I was very clear in the analysis. I said a retracement trend line has been broken. So this is, guys, retracement trend line. So people who entered here after this retracement trend line was broken could made really nice amount of pips. This is the analysis you could read, and we actually had a crude oil report that also supported my view on EuroCAD. So translated to trading terms, guys, well, here, for example, you will see now the chart. And you see EuroCAD. So at a time while I was making the analysis, the price was here, and when I published it, it went up straight from POC, you see here, straight from POC zone, and then it dropped. Now, we are not talking about how to make a POC zone, but rather which time frame to use. Because for confluence points, we always want to use bullish and bearish order blocks, retracement, EMA 89 trend lines, and all previous knowledge we have learned by having webinars with Price Action Trading School. Confluence points are important. So the primary purpose of MTF is to find confluence points on different time frames. So if we watch, for example, 4 hour, and we know that 4 hour is short, but our main target still hasn't been hit, because you see a retracement from main target, and we still have the news told us that this could be a retest of this target again. So we just go to 1 hour chart and spot confluence points there. Now, if we see that daily is strongly to the upside, to the downside, like here, 4 hour was having retracement here. So 1 hour, we made it for entry. So once more, guys, daily was strongly to the downside. I mean, this is a nosedive, as I said. 4 hour had a retracement at this point. This is retracement, guys. So we need to use 1 hour for spotting those confluence points. Very often you will see that there is no trend on 4 hour. And because of that, guys, you don't, on daily, sorry, and because of that you don't know where to look for, because this is not a clear trend here. There is a lot of whipsaw. On 4 hour, however, we saw that the trend was to the upside, right? Most of the time, starting from this region, from this point here, above H3, let's say, towards this point. So then, in between this, we could start searching for long entries. When we have a clear trend on daily, let's say it starts to drop, then we will use 4 hour time frame as a form of retracement, and then 1 hour will be used for actual entry. So in order to avoid confusion, you need to distinguish price trend, price momentum, and loss of momentum. For people who cannot define whether the price is overbought or oversold, well, I must say that you can also use CCI on 14 setting, but you need to add 150 and 200 with minus 150 and minus 200 respectively. It's important to add these levels because I don't think that 100 and minus 100 on CCI is enough to actually show you a proper retracement. I prefer to be more conservative when I place trend-based entries, because if you are not conservative with your entries, it means that you are scalping, guys. That is an aggressive approach to trading. And with POC zones and with those multiple time frame perspective, you're actually being more conservative. So you need to have a proper retracement. You're not scalping, right? In that case, my opinion is that we should add 150 and 200 to CCI to spot overbought and oversold levels. And if you, I don't need it personally, but many traders will need it. And that will be much easier to spot entry. So if you want to go short, because 4 hour was, let's use EuroCAD example. Because 4 hour was clearly in downtrend. We use it at POC zone especially, and POC zone is always overbought and oversold. And here you can see the price hit previous bearish order block, EMA, these levels, and at this time it was very, very, very overbought, even going above 200. What happened is down and down. So we used multiple time frame approach to base our entry within POC zone. And at that time, the only logic was to sell, because you sell in downtrend when price on entry time frame is in uptrend, guys. That is the primary logic of price action trading. Sell when price is high, buy when price is low. Sell when price is overbought, buy when price is oversold. Overbought in bearish trend, oversold in bullish trend. That is the only way I see with price action how you can make precise entries. If you use only a single time frame, as 90% of the systems that are free out there in the internet is telling you to do, the chances you will lose. Because most of the methods and systems do not use MTF approach. They don't use pigging back on proper time frames. Most of the systems are used for one time frame trading. It's not bad if you know how to use indicators and if you have confidence with the system. So yes, you can make money, of course. But with price action, things are a little bit different. And I need to say a bit more precise. So that is why you find my analysis, POC zones, that effective. Multiple time frame approach with confluence points where POC zones are after retracement. usually and most of the time they are either overbought or oversold depending on trend. Same is with in your life, in our life. When we, let's say, want to sell our car, would you really go with market price that is lowest, or you will try to sell it within the highest peaks of the market price? So let's say that you actually drive a BMW X5, right? And the price for 2-year car is, let's say, 60,000 euros, right? For example. And if you go and try to compare price that was made by the market, you will usually see different fluctuations within the price limit of that BMW, right? Or whatever car, guys, you want to drive. I mean, I just took an example of BMW, I mean. So you actually want to check the price on the market before you actually put it in before you advertise it for a sale, right? And you always need to take the realistic price into the account, right? You cannot go with something that is not realistic, because chances you won't be selling that. Okay? No one will buy it, guys, for that price. It's the law of the market. It's simply the law of the market. So if you're selling your car here, where the price is, let's say, overbought, right? You need to take the account if other people are also selling it. So that is why you check different prices on the internet that are being advertised in that moment. But if you want to sell a bit higher here and you don't see, and you see that no one is selling there, you won't be selling it. So that is why I'm saying you need to be always realistic with the price, with the market, and with yourself. If you try to sell your car here, the chance is that you will find a lot more buyers, right? And price will start to rise. So for that perspective, it's in price action the same. You need to watch historical price action. So if we try to sell Eurocat from this point, there were not actually many sellers there. What we see here, I will zoom into 4-hour time frame. Guys, here there were buyers only here. Here there were sellers. So if the price retraced there, I would still sell it, and I was very clear with it in my analysis, because I see that the price is in heavy downtrend, and the only thing we could see is retracement to the upside if price breaks 43.05, and it could get here and then it will be sold again, because in the history we see a lot of selling in this region, guys. A lot of selling in the history. So now I hope that you understand the concept of multiple time frame. The primary and the biggest conclusion to make it simpler is always remember price action, trend trading. No matter will you listen to me or anyone else, the sole truth is buying low, selling high. Buying low when price is in uptrend, you want a retracement, actually a short, a bearish time frame for a long entry, and when price is going down, you want a bullish entry time frame to sell it higher. When you know those principles, when you apply it, you will see that your trading will become easier. And Euro-CAD analysis was another proof that the price actually followed the same principle that I've been using for last 5-6 years. I also started with one time frame trading when I became a trader, and I was doing mostly Frankfurt fake entries pre-London most of the time, and then I switched to positional trading, and the best success was definitely with the exception of Camarilla MACD and multiple time frame approach. That was of course first known as practical naked trading, or PNT method, that I developed. For example, we can also use euro dollar, guys. I told you that I would actually sell euro dollar, and that for me euro dollar was only sell on rallies. And yet again, I mean, this approach was good. Daily strong downtrend, 4-hour header retracement, but also downtrend, 1-hour entry. And watch where it actually happened. Here, previous top. So this could have been a POC zone, and the price, I mean, it was very, very, very good. Euro dollar is good to trade now. Very clear bearish trend. Euro yen, I told you we would buy euro yen. Remember, guys, did you make an entry after session recap? Because euro yen was one of the best entries on previous session recap. I told you to buy around 170.55, and I made the analysis telling you that you could go long on euro yen. Remember the analysis, guys, 21st of November here. Okay, you remember that? 55 or 20, 30, the price dropped there within POC zone and spiked to the upside, giving you huge number of pips. This was euro yen, guys. And euro yen, watch this, huge momentum candles. 4-hour was clearly to the upside. It didn't hit weekly pivot points. It actually broke through H3. We know when resistance is broken and retested, it becomes support. It's also with Camarilla. I mean, you should have known about Camarilla by now. When H3, that is initially resistance, is broken and retested, it becomes support. So H3 can become support, H4 can become support, H5 never becomes support in my analysis, unless the price really make a strong move based on some news, and then we could actually see a retest. But in normal trading, when volatility is normal, when there is no such news such as Brexit or I don't know, some referendum news, then it's easy to use Camarilla really as support resistance indicator with clear rules. Initially, H3 is resistance, L3 is support. If L3 is broken and retested, it becomes resistance. That means the downtrend is in place. Here on 4-hour, we had break of H3, clearly an uptrend. We zoomed into 1 hour. I found POC spots. The price was oversold. Okay, the price was oversold here. See, oversold there also. It was clearly within the concepts of MTF analysis here, guys. You see, it hit minus 150, and what we had is actually long trading opportunity. I mean, as I say, I don't need a CCI indicator to tell me whether the price is overbought or oversold, but rather I spot POC zones manually. But for you, it might help actually. So if you have any questions, guys, I am free to answer. And I hope that this is clear. I mean, this is really not hard to understand. These are concepts of price action meant for all sorts of traders. I don't care if you are proficient or novice trader. I'm sure that this can help you. It can definitely help you, your decisions, and it can effectively make you really a trader that is more secure in her or his own entries. Because I know that a lot of insecurity comes from not knowing where to place your entries. That can be the hardest part of a trader, not to know where to place an entry. I mean, I know because I've been there, and actually that can be a little bit hard for people who never traded the way I trade. But usually the way how I'm showing you this should be very, very enough for you to actually be a proficient trader. ATR indicator is my own indicator that I use for this purpose. This is the indicator, and I already sent it to people who asked for it. What you need is just to place an entry in your chart, and there you will see it. So let's take a look, for example, here at this ODN. You see, guys, ODN is clearly in uptrend, and I was telling you that yen pairs are very, very good to trade, and you can see that those pairs are really good to trade indeed. So 4 hour it was breaking through H4. This was a retest, so it means that this is support now, and it means we could have started searching for entries. Here, guys, you see the price was going there, and on 1 hour entry we had a retracement. But what if we want to go long now? Whatever happens, guys, we should not go long now. Maybe you will think, okay, yes, but I mean, this is clearly uptrend. It's also retracement. Yes, guys, but this is not enough. We need to have a proper retracement. Also, look where CCI is. It's still overbought. So I would rather risk not having an entry than having a bad entry in the market. If you add, usually I put this to 14 here. Watch this now. It's also very, very close to its full ATR. So if you ask me whether I would like to make money or skip this trade by going long, I would say I want to make money, but I would skip going long now. I would like a retracement, preferably a healthy retracement. If we take, for example, this swing into account, we can also see that here 38.2 is confluence with bullish order block. It's also above H4, so we might have a long entry here, right? Around this level. But for that, guys, it needs, sorry, now I'm showing the screen. So you see, this is retracement from this spot to this spot. I mean, now to go long, even if it still wants to go long, I would skip it. Watch this. I mean, it's very clear. Better wait than making a premature entry that will lead to loss. Because for a proper entry, it needs at least to come around this level. It needs 45 pips, guys, of retracement. Going long here, I mean, look the history. No one is going long there. So, I mean, even if it wants to go long, I would skip it. I would rather wait for a retracement. And that is what price action trading is about. Being patient. Because patience will give you success. Impatience will make you lose your trades, even if you know what to do. And your psychology is gambler-like, then you might reconsider what I am telling now. Try to be patient. Try to consider better and bigger retracement, even for a chance of not having an entry. This would be a good entry, guys, long. If we had an important news that can move ODN, and you see this on 15-minute time frame, for example, here, then if this was news, you just drop to 5 or 1 minute time frame and search for long entries. Because after the news, momentum is strong. But when you don't have any news, like now, for example, the chances that the price might deeper retrace because traders are closing their long positions. So from logical perspective, I would expect some retrace before going long. Reddy is asking anything about FOMC minute today? No, I don't have anything that important. And I mean, there will be some movement, but more important is FOMC meeting next month, December. Now we might see some cues, but as I say, I don't see that anything that important will happen unless we see some cues about possible rate hikes and further policies. For you guys, now it's time to rest. If you trade European and New York session, and it's much better, as I say, to wait than to rush for entries. So that was it, guys. If you have any questions, please go ahead and ask me. I hope that you enjoyed EuroCAD. I might say that EuroCAD is the analysis of the week, and I hope that you like that I make something different than euro dollar, pound dollar. I will make a poll, guys, on Twitter, so be sure to answer questions, because I really don't want to make always the same analysis. I want you to be able to trade every single pair that is good to trade. That is why I picked EuroCAD. EuroCAD was definitely the best pair to trade if you follow it today. It's not just euro dollar, pound dollar, euro yen, pound yen. Sometimes we really need to do some other pairs, guys. You want to trade like professionals, guys. Tony is asking, is this webinar recorded and put on YouTube? Tony, this webinar is being recorded and will be put on YouTube tomorrow. Indeed. Tomorrow, I guess around noon, London noon, so check it and it will be on. Now it's being recorded, and yes, you will be able to locate it on a YouTube. Vida is saying MTF makes sense. Of course, guys, this makes sense. I mean, you see what I do each day, you see my analysis, you see POC zones, and that should be enough to tell you that it indeed makes sense. Trading is different, guys. Some people, let's say EuroCAD, some people would go short. Let's say that we all went short at this point. But all of us who went short will have different results, because some people will use 5% of risk. Some people will use 1% of risk. Some people will use 30% of risk. Some people would close it here. Some people will close it here. Some people would have closed it here. And even though if we all took the same entry here, we would all had different results, guys. That's different. But the main purpose is where to search for entries. How you do your money management, it's up to you guys. Some people call me crazy if I make 1% of risk, because they don't even start to trade without 10% of risk. I mean, I know a lot of traders that do that, especially with a gambling background. They like Forex trading because Forex trading is great for people who want to gamble. I always say still there is more chance to win than in casino. But from professional trading perspective, such as banks do, you want actually low risk entry. Reddy is saying, once again, I'm asking for ATR how to arrange top of the chart. Okay, let me show you once more. I will delete. You see, I deleted ATR indicator. Okay, and now watch me what I do. I mean, everything is all right. I don't know why you don't see the indicator, because this is how I do it. Let me just give you an example. Okay, here guys, for example, I go here, ADTR, I just drive it there, press OK, and here, it's on the chart. So I don't know already why you don't see it. I mean, this is what I do and what everyone has been doing, so I guess I don't know what's wrong. So that's it. I mean, simple steps. Okay, guys, so that would be all from me. I don't see any questions regarding FTF. This is my indicator that I send to all traders who trade with us. It's not a part of Supreme Edition. It's actually my own indicator. I mean, the indicator that I own. But if you want to download Supreme Edition, you should do it for other things. But this indicator is not part of Supreme Edition. So thank you again for listening to me. I will be with you soon. Next week, expect that we cover Italian referendum, and we will give you tips and tricks how to trade Italian referendum. And for tomorrow, as always, I will prepare new analysis. For all questions regarding indicators, guys, just contact me, send me an email on tarantulafx@gmail.com. Okay, and I will be glad to send you the indicators. Cheers, guys. I wish you a very pleasant evening. Have a great rest of the day, and I will talk to you soon. Trade safe.